We're coming up on Permissionless 4, happening June 24th to 26th in Brooklyn, New York. It's the premier conference for crypto builders. Whether you're building on Solana, trading in the trenches, or just curious about DeFi, you won't want to miss it. Mert and I will also both be there. We'll be hosting a Lightspeed pod meetup at a bar, and I'd love to meet some of you in person. Ticket prices will go up, so snag yours early and use the code Lightspeed10 to get 10% off at checkout. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by David Rhodus, founder and CEO of Permissionless Labs, which is helping develop the Pipe network. David, thank you for swinging by the studio today.
Thanks for having me. Thrilled to come, and it's busy acceleration week, so thanks for squeezing me in here.
Totally, yeah, tons going on, but we had to make it happen because you're out in New York for Accelerate, and this was a by popular demand episode. We asked the Lightspeed Telegram, what episode do you guys want to see? And I don't know if this was you were astroturfing the Telegram or something, but we got like multiple people saying, I want to learn how Pipe Network works. So we're for the people here at Lightspeed. So we booked you, had you come on, and excited to get into it. I guess that's your pitch to join the Lightspeed Telegram too. Lots of good stuff going on in there. All the Lightspeed pod alpha. So David, Pipe Network, interesting new kind of DePIN startup in the CDN space. I think I want to just start and let you explain, how do CDNs work, content distribution networks, and what is the problem with CDNs that Pipe Network is trying to solve?
Yeah, it's a fascinating area of the internet. Today, 3 to 4 billion people use a CDN every day. So like about 80-90% of internet traffic goes through CDNs. And what they do is they'll connect to a web server like, CNN, foxnews.com, whatever. They'll fan that website out across the globe in these set of caches to make it load faster for the individual users. And they've been around for about 25 years. I think the last wave of innovation happened about 15 years ago with like this technology called Anycast and kind of hijacking BGP to make them load faster. And they've been relatively stagnant since then. My team and I, love streaming video technology, and, we've broken every CDN out there in existence. So we've always wanted to take a swing at this. Using blockchain for like coordinating nodes is fascinating, and it allows us to have what people would call as like a hyper local node. And for CDN, that's really important to get that last mile down closer to the user. For example, if you look at a traditional CDN like Cloudflare or the bigger ones like Akamai, those cache nodes are about 150 miles from the user. So that's still considerable distance. So that introduces quite a bit of latency. Our model is to get that cache data about 50 to 20 miles to the user. And it's amazing. So if you look at traditional CDN, they're 80, 150 milliseconds of latency. When you're in like the 20-mile range from the user, you're seeing like single-digit millisecond latency.
Wow.
Basically, we think it will not only revolutionize like the CDN industry, it's going to open a new area of innovation, I think, for edge-based compute and things like that.
Yeah, I saw somewhere on your website the goal is the speed of light plus 3 milliseconds. Is that sort of where that comes from? Is if you get close enough to the user, it's a couple of milliseconds that you're adding to deliver the content?
Yeah, we gave ourselves 3 milliseconds on the software side.
Good. Not making it too hard on yourselves. Yeah, that's funny.
Yeah, I think the team feels like 1 millisecond, but I've seen
like, hey, now,
engineers take a little while to deliver.
We have investors to appease here. That's funny. CDNs are already distributed networks, and there's examples of trying to take these distributed networks and add the crypto component. And I think what I see Pipe pitching a lot is we can actually get users their content faster. It's not just decentralized or whatever. There's like an actual performance benefit to the end user here.
Yeah, we were, so my team's traditionally Web 2, very skeptical of blockchain, almost generally negative, honestly, after the past few years. It's unfortunate. And we reached out to every principal engineer we knew at Google, Amazon, different places to gut check this before we spent time engineering a solution that might not work. And we talked to everyone we could, and they all agreed that the math behind this was incredible, that if we could pull off the coordination effort, our latency and the technology would supersede any existing CDNs, just by reducing the speed of light distance the data's got to travel.
Mm-hmm. Yeah, I'm curious how this all connects, because you mentioned at the top of the episode, CDNs came out around 25 years ago. There hasn't been a lot of innovation on that model, which is just, hey, if we can like store the data temporarily closer to the user, they can load web data faster. But the big way the internet has changed since then is streaming. Like, we're all streaming videos all the time. Every social media platform is devolving, in my view, into like video slop. But like, there's just this insatiable appetite kind of to stream video. So, do you think there's a connection there where like the next movement forward in CDNs is needed to meet the demands of video streaming?
Absolutely. I can give you some examples. So, we were acquired by Amazon. So one of our major first legs we had to do was integrate with Amazon Video and help those guys out. And, they run a multi-billion-dollar CDN themselves, yet they still contract with half a dozen CDNs. And majorly issue there is like, geographically, no CDN has sufficient coverage. So you've got to use and plug them all together to get decent geographical coverage. And yet, if you're still contracting with basically every CDN in existence, there'll be areas where you've got to lower the quality of the video, things like that. So even today, there's still insufficient coverage. It's difficult, if almost impossible, to stream real 4K video still. And, just a few weeks ago, we saw a huge meltdown of like live streaming with a boxing match on Netflix. And that's some of the best infrastructure in this world.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Let's maybe drill down, I guess, into more of the nitty-gritty then. So, typical CDN, say Cloudflare or something, they're operating all of these distributed nodes throughout the world to be able to like store data closer to users. In your case, it sounds like there's like permissionless node operators on the pipe network that are storing that data, which might be a little more tricky. So how's all the decentralized like blockchain elements of it going to work?
We love the node runners, so we're super thrilled that they come in, but you've got to be highly skeptical that they're doing the work correctly. So we think created some probably clever, unique engineering practices here. So permissionless, anyone can join. I think at certain times the system will issue bounties and say, hey, put it in this area in India or some particular cities when we need more bandwidth and coverage. I would frame what the pipe pop node is doing as like proof of work, and it's delivering bandwidth in the form of what's called egress. So it's egressing data out to the user for video playback or an LLM or maybe some NFTs if we're hanging out in the Web3 space. And it's very difficult to verify that node has actually done that work. They've sent the bandwidth.
Mm-hmm.
We first looked at some interesting technology. Our investor showed us called ZKTLS, and it's very cool. We tested it, and it introduced over 100 milliseconds of latency into our workflow. So we immediately threw that out the door. Like,
interesting, yeah.
We came up with some,
and that would have. I'm actually not super familiar with ZKTLS, but this would have just been like a cryptographic way of verifying that node operators are doing what they're supposed to in the network.
Yeah, it's it plays in your web browser, like HTTPS.
Mm-hmm.
These guys come up with like a clever way to issue a zero knowledge proof that was initiated, but huge overhead. And it's beautiful, like scientific research. We had to go back and pragmatically build something that A, wouldn't have any modification on the client side, and B, was like very robust. So we use two protocols. We use Quick, which is what Solana uses today. We use that for like rapidly getting the cache data to the nodes. Then when we're serving the data, we use traditional TCP. So all browsers just work magically. We went back and we looked at how can we perform like a zero knowledge proof on a TCP session, and through a whole bunch of coffees and thinking, we come up with what we call ZK-TCP, and it allows us to look at the timestamp numbers as like the TCP session continues. It builds up these timestamps, and you can count those, and you can hash the data in there. It's kind of typical zero knowledge workflow. We were shocked no one had done it before. So essentially, the node creates this like ZK proof, and then you can write it to the blockchain, or you can even just serve it on an API endpoint, and then someone comes in and verifies it, and then the node gets paid for that egress work.
Is the timestamping aspect of that similar to how Solana works with timestamping, or formerly soon, I guess, they just changed the consensus protocol?
It's similar. We're basically using timestamps that are in TCP. It uses this like crazy SYNAC model. So every time you send data, it sends a packet back saying and acknowledging the receipt of it. And those timestamps just increment as you send more data.
Mm-hmm. Okay. And so say I'm a guy with a computer server in India, and I want to join the Pipe network. My work is going to be verified through this ZK-TCP mechanism. Am I rewarded with a Pipe token? Like what incentivizes my use of the network?
Yeah, definitely. So, we're still in a early test net, but looking to launch very, very soon. And the incentives would be very similar to most DePINs out there, though. I don't know. That's a whole nother thing of like, I feel like we're different than DePIN, but we use the burn mint equilibrium. So like a customer go and he'll acquire some pipe, he'll burn it for the bandwidth data credits. And then as the node services that, they'll get pipe credits, pipe tokens essentially for verified proof of work that they did the bandwidth egress.
Okay. And then on the like client side, I don't really know how the CDN business works. So, if a Lightspeed listener is trying to load this video on YouTube and they're using a CDN, is like Google going to Cloudflare or Akamai or whatever and like contracting with them to provide CDN services, or is there some kind of other network for whoever can like load the data fastest for the user?
Yeah, typically the media outlet like YouTube or Amazon Video, Hulu, they'll go out and just contract directly, and the CDN will provide like some APIs and suggestions on how to set the workflow up. Those have been pretty well baked for about 15 years or so, and
like everyone has their CDN person locked in.
Yeah, so we went out and we looked at like Akamai's APIs and just we can mimic those. So makes it super easy, just plug and play us. And we've got other innovations that we think are pretty unique as well. Like the way we route the data and connect the user. Basically, we reinvented DNS in a way.
Okay. Say more.
Yeah. We try to not innovate outside of our lane, delivering data super quickly, but occasionally you have to, to move very pragmatically and quickly. So we look at DNS as, I'd call it pipe DNS at this point. It's like some kind of next generation of DNS. So it has all kinds of like semantic contextual awareness of the data that is being cached and what the users are requesting. So for example, you're here in Manhattan and you want to get, latest YouTube or who knows, right? Sports video. What this will do is it will look at your requesting location. So on your phone, your house, whatever, and it will look at the closest cache nodes that have that data, and it will target you to those using like DNS. So it will immediately connect you. Almost all CDNs go through like 2 or 3 layers of cache to get the user connected. So this removes like multiple hops in the CDN space. And that's how we get a lot of that magic, super low latency in there.
I know this isn't out yet, so there's like these numbers are a little bit of a grain of salt, but just in like testing, how much of an improvement have you seen over some of the existing CDNs?
Yeah, we definitely are not like saying it's done for sure, but we're seeing like a lot of 40 millisecond timing, so probably half this latency of Akamai already. A lot of that's subject to node density in certain locations. So as the network scales, it will naturally lower the latency as we get closer to the users. We've got, great coverage right now. We've not done any bounties. It's just kind of been like Wild West, sign up, run a node, break the software if you can, kind of early days of a project. And we've got, I want to say like a 200 and something thousand nodes out there today.
Wow.
There's some kind of super cool excitement out there. I'm really thrilled of like the pipe community coming in and supporting us crazy engineers.
Is it permissionless to run a pipe network node?
Typically it is. This like latest test net, we've been onboarding a little slowly in the beginning just to make sure it stabilizes. DevNet, anyone could sign up at any time. Probably in a week or two, testnet will just allow anyone on Earth to sign up.
And that's by design because you want to get these hyper localized nodes.
Hyper localized, and just also the belief that anyone can come in and participate and contribute value work, and it's the work's super valuable for the protocol. And then depending on where these people are located in certain areas of the world, like Nigeria and stuff, they they're making a week's worth of groceries per day. It's really beautiful to see the positive impact on certain areas of the world.
Totally, yeah. This does get into though something I wanted to pick your brain about a little bit, which is when it comes to DePINs, there can be a push and pull between allowing anybody to spin up a node in your DePIN network and basically like strategically whitelisting nodes based on high value locations. Mm-hmm. So one example of this you could talk about is Helium. Maybe the most popular DePIN still in crypto. And anyone could plug in a Helium miner and begin participating back then in the IoT network, now the mobile network. They've had issues, I guess, over the years with like monetizing that effectively. No one really knows exactly what their financials look like, but I'm not sure if the mobile business is like profitable at this point or what that looks like. There's a new company called XNet, which I'm not saying one of these is better or worse. I'm just bringing this up for comparison's sake, which to my understanding, XNet is doing mobile carrier offloading to Wi-Fi. So like kind of similar to what Helium does with mobile data, but instead they say, if you're a business or something, we want to have like a Wi-Fi hotspot there. And so you have to apply and we'll let you participate in our network. Basically saying that like we're only going to deploy these things in high value locations because it is not good business sense for the network to let anybody deploy a node anywhere. Because if you have, I don't know, a bunch of nodes in rural Montana that are, receiving the token, but not actually like servicing many users, that's like a negative outcome for your DePIN. So a little bit of a long-winded way to ask, like, is there a world in which you do a more whitelisted model where basically nodes, you incentivize nodes in high value areas, or you only allow people to run pipe network nodes in places where there's a lot of content demand?
I think in general, we try to stay in a permissionless environment, enable anyone to participate. That being said, like geographical bounties, if we need more nodes in Montana or some certain areas at times, I think there's two components there. If you look at like, 45% of the world still is like in a rural area outside of a metropolitan. So there still needs to be a large quantity of nodes out there. Those don't have to be as dense as far as like number of nodes, but the nodes need to be super high quality, like, 1 gigabit, 10 gigabit, 40 gigabit, as really high networking as possible. The other side of that coin, I think, is, those guys were pioneers. They kind of led this space and did a lot of amazing experiments, and they've shared a lot of battle stories with me. And part of that is like very slowly emitting the token so that the network has quite an ammunition, in the future for growth and other types of pieces. And I think it goes back to the principle of like, we're essentially a proof of work. So there's no token reward for uptime. Uptime is just, you got to provide uptime, and then servicing the bandwidth, you get paid for the egress.
Maybe that's a helpful jumping off point to just ask how you think about tokenomics more broadly. Because I think that's, as we've kind of alluded to, like a nut that the DePIN world is yet to completely crack on. It's easy to maybe bootstrap supply for this network, where a lot of people will plug in miners to receive a crypto token, and it's really good at driving attention to that DePIN project, but it doesn't always work out long term to be like economically sustainable to run these miners, or maybe it's harder to pick up the supply, the demand side for the service that all that supply is offering. So just as you've built out pipe so far, how do you think about as you've built out pipe so far, how are you thinking about tokenomics where it stands currently?
Yeah, I think we're very ruthless in the tokenomics aspect, that, we're emitting tokens when useful work is done. While we want a lot of nodes, like, we also want to coordinate them into areas that customers will find useful. For example, like our sales pitch is, we'll go to a large streaming platform and say, give us the like top 100 worst performing cities. We'll incentivize nodes there. So it's like, we immediately are solving a problem for these customers. We don't go say, give us your $100 million a month contract. We come in and prove ourselves with like very valuable work to the client. And I think part of that is like, looking at other successful models. I think, even though it's not DePIN, or maybe it is in some lenses, like Solana itself, they didn't go after like emitting a lot of tokens, marketing. They just wanted to build great tech. And I think we're similar bloodline of like, just build amazing tech. If there's ups and downs, we'll innovate through it.
It's interesting when you think of this with something like 00, this kind of like internet filtering startup, where that tech could apply to Web 2, but it seems like they're going the crypto route first, and then we could ask them, but I would think that like if they prove out in the crypto world that this thing works, then you expand to like training AI models or whatever else. But you're just off the bat going to try to sell to kind of, YouTube or whoever it is for the video streaming. Is that just because there's a much like more relevant client base in Web 2? Like, I don't think there's a lot of video streaming in in crypto.
Yeah. So, most of the team, like, we've known each other for over a decade. We previously exited a video, it's called video transcoding software to AWS in 2015. So, all we know is like the media industry, essentially. CDNs are enormous. Like, the market cap, like one of our competitors, Cloudflare, is, I think, 54 billion today. If you look at like high frequency trading infrastructure, it's like a 3 billion a year industry. So, we're going after like a huge, massive industry here. Double Zero folks are great. Like, we talk all the time. I think, they can provide a lot of like cross continent interconnects so we can cache data sooner. And then, I kind of jumping the gun, but sounds like they're probably going to run some nodes as well.
Do you have a sense when you talk about the market cap of the CDN business, like Cloudflare, Akamai, they do CDN stuff, but they do other like internet services as well. Do you have a sense of how much of like those businesses financially are supported by CDN, the CDN parts of the business versus like other revenue products they have?
Yeah, it's great. We love like publicly traded companies because of what they share. And you can look at a lot of companies like Akamai or Fastly, and you'll see, I want to say like 3% on edge compute is like revenue. So it's very small. Like the security offering and everything's usually like 10 or 12%, and servicing bandwidth, like, still the core money maker.
Most of it. Mm-hmm. Okay. Interesting. Yeah, I would have thought it was more diversified than that, actually. That's interesting.
They tried to go into the payments category years ago, and they essentially weren't able to pick up traction there. So it's just an area super ripe for innovation.
Totally. So then maybe the question is like, there's been at least one past experiment in like Web3 CDN. The Filecoin had this thing called Saturn, which I would think you looked into a little bit. Like, and there's been other, attempts to take distributed computing networks and cryptoize them. Like distributed compute is like a Web3 thing. And none of these businesses, I think, have really like taken off yet. And especially, I mean, the Filecoin's CDN network shut down in 2024 as I was looking into this episode. So if this is so ripe for innovation and like there's a real opportunity here, like why do you think past iterations have failed, and what is Pipe going to do differently that'll make it work out this time?
I think like the network you talk about, they were like pioneers of innovation. I think they're also more like scientists than entrepreneurs. Rumor was that they couldn't decide whether or not to take money or not for funding, so they ended up just shutting down. So that very bizarre from an entrepreneur lens. Again, we walked backwards. We went and called up like, directors of the Amazon Video and said, "Hey, is this nuts? Or would you potentially use this?" And they said, "If you can service those terrible buffering areas of the world, we'll use it." So, we started with product focused approach first. Like, we didn't like want to build and get the product market fit. We wanted to know product market fit was there before we started coding.
And you've said that like what that might look like is Amazon's like, "Hey, hypothetically, they're like, "Hey, we'll give you our service in like Mongolia where it takes really long to like load our videos." And then you start to build out the business that way by going on the fringes where users don't get content quickly right now.
Exactly. They'll go anywhere. So like, maybe it's like Kansas City in America or some of these rural areas. Maybe it's in the areas of like APAC or Egypt or something where they may not even have launched due to like lack of sufficient bandwidth in those areas. And there's a lot of amazing things that can happen too with this. For example, we used to service cricket, so we stream that in India. So India technically has the most expensive bandwidth on Earth, which is and it's because it's so scarce. Like, we're streaming this out to like a billion people watching at once, and the amount of bandwidth available so low, we have to cut the video to like 1 megabit per second. Typically if you're watching Netflix, it's like 10 megabits per second.
Mhm.
And, we felt so bad because we're like video geeks looking at the quality, and super excited to try to like launch in India and see if we can, deliver much higher quality video to those people.
Why is there not more bandwidth supply in India? That I would think people would want to expand there.
I think, I think it's an issue of like regulation and who owns what, and they're able to squeeze money out of the pipe, and they don't have to provide better service.
Yeah, I mean, are there regulatory hurdles for pipe network, like being able to operate nodes in different regimes throughout the world?
We're typically anti-government. We'll innovate and have the lawyers clean it up later. That's kind of Eric Schmidt, I think, from Google's.
Yeah. Famous last words. Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. One thing I don't know if we've really gotten into is how is this related to Solana? Because you have kind of this network that's incentivized through crypto. Is it just that the pipe token is like issued on Solana, or is there a different way that it's kind of integrated?
Yeah, it was more just like coincidence. I randomly got connected to Anatoly. Didn't actually really know who he was, or very little about Solana actually. And we're just like talking random, like erasure encoding, error correction stuff, like just nerd stuff, right? And like, wow, you're running this blockchain, like you're one of the most heavy engineering persons I've met in like this crypto Web3 environment. So, it gave me a lot of comfort to like use Solana for innovation there. I think we have a lot of ideas of like working with Solana and improving it over time. I don't know if any of them come to fruition because they're like a lightning speed innovation house themselves, but we'd love to kind of work aside that, perhaps like provide things like lazy account fetching, lazy ledger fetching, so that validators could be a little more lightweight and things like that.
What is lazy account fetching?
Yeah. So if you look at like a validator today, there's 60 million active wallets on Solana. So it's a huge part of like the disk space, and it's constantly just chewing through it to make sure, the state and all that's appropriate. And, if you could just perform like micro transactions with pipe and say, oh, what's the balance of this? And let me update it. It'd loosen up the requirements greatly for running Solana validator.
But do the nodes in the pipe network have anything to do with Solana, or is it like a totally separate network that you're building?
It's a distributed network on top of Solana. So like we can emit the zero knowledge proofs there. Verifiers can come in, verify it, and then the rewards are paid out to the nodes themselves. We try to stay very agnostic at this point. I think, Solana is definitely like the racehorse winner right now, but we're very cautious. This industry seems like it's so new. We don't want to get too tied down, but right now it looks like Solana is the place to be innovating.
Can you think of this as like a layer 2 that settles the like ZK proofs to Solana's network?
That's probably a crypto way of framing it, though. Yeah. There's really no like transactional value. There's nothing happening there. It's like a ledger. in our system. So I think typically a layer 2 is more like having transactions and things occur there.
But you're just using Solana as like a data ledger.
Yeah, just pure like accounts, payout, and we post the zero knowledge proofs there for secure verification of the bandwidth. So we love proof of work. Like, I think proof of stake's fascinating for L1s, but for services that are delivering like data, computation, things like that, they just have to be proof of work.
Yeah, I think many in crypto are sort of swinging back to interest in proof of work. Proof of stake was this hot thing. I mean, I was around when the merge happened in Ethereum, and that was a huge deal. But like this sense of there's like something real backing the value of your tokens or whatever it is, I think is interesting a lot of people right now.
Yeah, I think it's super cool. If we're gonna bring over like hundreds of millions, billions of dollars of revenue, it's got to be extremely well backed, with verification, because these are huge numbers, and they're going to pull in the Deloittes, things like that, to audit this, make sure it's very real. This is not a small industry we're trying to bring over to crypto.
You mentioned a bit about your background. I'll maybe give you some more space to do that. I also saw on LinkedIn that you were at Consensus for a couple of years, so I'm curious to hear like what your crypto involvement was prior to Pipe Network, and maybe talk about your Amazon acquired startup and how you met the people that you're working on Pipe Network with right now.
Yeah, I've always been, crypto curious. I think some interns or something a long time ago told me about Silk Road, a shopping website. They could get.
You were buying lots of meth on there.
I think we did buy some coffee for the office on there.
Yeah,
it was kind of cool to see. Like, it was nice beans we ground up and things. But so I've been very curious about crypto for a long time. My colleagues at the startup Elemental, before we got acquired by Amazon, they were super hyped on this thing called Ethereum, and like, oh, you need to get in this ICO, put some of your Bitcoin in there. And I'm like, that doesn't exist yet. I was very skeptical. We ended up doing some prototypes with Ethereum inside of Amazon. I don't think any of it actually shipped, but we did some like digital rights management, trying to secure like those workflows. Typically there's like one guy in a back room with a magical set of keys that can decrypt, any videos for these content archives. So that was very cool. We got acquired in 2015, and massive learning, process integrating through Amazon. Most of like my core cloud team there is working on this now. And I think, blockchain was super interesting. We did a couple integrations, so kind of led me to like poke my head out of Amazon. And Consensus was in this like manic hiring spree at the time, so that was super cool. I went there, did a lot of research, primarily built, I'd say like half a dozen like apps focused on like data marketplace, where people could go and like sell their data. It was during that like 2017, 2018 anti-Facebook movement. So trying to empower people to have their own data marketplaces there. I think we built several of them, and depending on the time of the day, the gas fee was egregious. It's $300 in Ethereum to sell your data. So yeah, those didn't scale out.
Something that's been on my mind lately has just been the way that we should value DePINs. You've mentioned you're a little different from a DePIN, but I guess I'll just throw some thoughts out on the table and then get your take. But I think that a lot of value in Solana right now is generated by meme coins, which the market wants them, but they're not always the most serious thing to talk about or whatever. And so DePIN is often brought up as, hey, look, Solana is not just meme coins. We also have these DePIN networks. But a lot of the DePIN networks, a lot of them have real business models. They're like doing real things, but maybe it's not as venture scale as they were first pitched. I don't want to like seem like I'm picking on Helium or whatever. They're just like the easy first example, but they raised like 300 million in venture funding, 350 million, something like that. And I'm not sure if you would underwrite that present day with like what their revenue looks like with, I think they're doing a lot of offloading data right now, which is a use case, but maybe just not this like huge, unseating the telco giants type of outcome. So I don't know, like, and looking at Pipe Network, you're talking about, well, we're not going to like become the exclusive CDN for YouTube on day one. We're going to go to these more niche markets where maybe they can't service users or something like that. So basically how can like Pipe Network scale, and how should, just as an entrepreneur, like how do you think about the ways that we should value DePINs in general?
I think, from like a kind of a rational entrepreneur perspective, you want to look back at their Web 2 counterparts and use that as like forward looking, price projections, things like that. For Pipe Network, we've done the bandwidth estimations of like what we need to actually service all of existing CDNs out there. It's somewhere between like 1 to 2 million nodes. So it's very reasonable essentially. And, if you look at, for example, the way the traditional market prices things is really bizarre. So like in the CDN space, if you look at this company called Akamai, right? They have a market cap today of like 11 billion. They have twice the revenue of Cloudflare. And if you look at Cloudflare, they have a market cap of 54 billion. And they had 25% growth last year. That's great. So investors are super hyped up. You'll not find a tier 1 media company using Cloudflare because the latencies are too high. So
why is that? That's curious.
They're more just like a general broad fan out CDN that's
well, no, but like why is the market cap so high if it has less revenue than Akamai?
Yeah, markets are very bizarre. Yeah, right. So I'm trying to frame as like
sure.
You look at the Web 2 disparity there between like a true like unmovable CDN until Pipe, but that's another story. Like it's severely underpriced. 11 billion versus 54 billion. I think DePIN has similar things they've got to step through. They've got to get really strong analysts to come in. I think, you guys look at things from a very pragmatic lens of like users, growth, revenue, demand, and just trying to move those principles over of like estimated growth. So, the market thinks Cloudflare is going to have this tremendous growth very soon, based on, I think, adding in AI inference and things like that. And maybe that's true. It's hard to say, but today from a revenue perspective, it's really hard to process the difference in like valuations out there.
Mm-hmm. I guess to zoom in on DePIN then, like, do you think that DePINs generally can become like the only things we use, or should they be more like we fill in the gaps where the legacy infrastructure won't work? Because like, to come for a lot of these DePINs, the physical infrastructure that does exist is pretty expensive and pretty like it works okay. But maybe where DePIN really fits in is like, hey, I need content delivered to me in India, or I need like cell reception when I'm in this busy mall where like the service is getting throttled. So like,
yeah,
do you think DePINs can become the thing, or will they be sort of filling in the gaps where the legacy infrastructure isn't hitting right now?
I think it's probably both. Like, I think, for example, the carry offload is really amazing. They seem to be doing great, growing tremendously, but they're not going to be able to displace like AT&T. When I was at Amazon, we had a lot of conversations with AT&T. Can we move over large parts of your business? That infrastructure was so much larger than all of Amazon. Like we couldn't handle any of that basically. So to think like DePIN's going to come in and like be able to set up that level of infrastructure is it's not going to happen.
Mm-hmm.
But if you look at other things like AI inference, for example, very recently, Microsoft just pulled back, I think about 80 billion in new investments in data centers for AI.
Oh, yeah.
There's some videos out of the CEO talking about how they're building out what they call is very cool to me. Is like hyperscale edge fleets to serve inference. And I look at that and I think, well, that's exactly what DePIN's doing. So DePIN can run like neck and neck with like AI today.
Hmm. Okay. So you do think that these DePINs can, in some sense, outperform the legacy counterparts?
In certain sectors, for sure. I think,
just maybe not like a broad. The whole world is going to become DePIN. Like sometimes the centralized physical infrastructure is better for some reasons.
I mean, AT&T's got like hundreds of billions of dollars of physical infrastructure. It's you can't replicate that super quickly.
Okay, so Pipe Network currently in testnet. I don't know how much you're able to say today about what the future looks like, but what does the future look like?
Yeah, I think we're going to push into production very soon this summer. We've got a lot of super cool features we're going to add on. It's like traditional CDN things of like video transcoding. We've got a bunch of partners coming in from even other blockchains asking for features like this. So really excited to collaborate, with, some other like Aptos, Sui style chains out there. And I think we've got quite a bit happening on the AI inference side. Like half of the people testing Pipe today are using it for like chatbots, LLMs, like things we didn't foresee. So
yeah,
I love that like beautiful new ground that we're touching. And we have a roadmap for like helping build out AI inference and get that down to like, 10, 20 millisecond latency.
Are we talking like OpenAI, or is this more like indie, like dispersed kinds of AI shops?
I think it's both. I think it's great for innovators out there. I think it's also, if you look at the Microsoft statement, that's essentially they're speaking for OpenAI. They're trying to move the inference to the edge. So, taking those models, building a very small niche so that they can execute on the edge.
Crypto and AI has been a little bit of like a cursed sector so far. It's a thing that has had lots of talk and lots of, kind of unmet expectations, I'll say. So what would be how could Pipe Network service AI providers? Say more about that.
Yeah, I can see the expectations are, in crypto, the expectations are like today,
Yes, exactly.
We're in a traditional market, like IPOs 10 years or something. So, we've seen these like crazy large models, build out, and we still don't know if they're hitting any kind of max size at this point, but, user demand's super high, and, the feedback is so that these things need to be more responsive. So they're going to carve out and build like smaller models from these super large ones, push out to the edge. And, I think that's where crypto finally can come in and feed that. But, before example, it costs like a couple million, to train a small model. You need $250 million in infrastructure. That changes every year. I don't think that was like anything crypto could be pioneering at that point.
Yeah, but that's an interesting fit with Pipe Network, because you've mentioned that there's kind of like an established game board in the CDN world right now where the big video streamers have their CDN provider, but like the demand for AI inference is really expanding, and so maybe there's some kind of opportunity there where like the need for CDNs for AI greatly increases, and so there's like chaos is a ladder, as they say. Like there's an opportunity to step into that field more so even than video.
Yeah, it's very fascinating to like look at things like AI video streaming from like what is like actually rationally happening today. So for example, all this stuff moving to the edge is super great for Pipe, and we're more than happy to innovate that out. Some CDNs are looking at it, some are ignoring it, and that's fine. I think it's an area like we can work with Web3 partners to help service this inference. We're just trying to deliver the bits. We're not trying to be an AI startup for sure. But like, if you look at like the rational perspective of how the internet flows today, AI is like, it's super valuable. It's super used every day, but let's like look at it from a perspective of electricity consumption. It's still less than 1% of the world's electricity is used for like training, servicing AI. If you look at like global video streaming, that's over 3% of the world's electricity used every year for servicing streaming video. So CDNs alone are about 1.1, 1.2%. So AI is still very small. It hasn't really completely taken off yet. If you look at it, just comparing electricity usage to streaming video.
I think that was most of what I'd wanted to ask you about, David. I guess I'll conclude by just asking, formerly non-crypto founder, now in crypto, like what should founders know as they venture into like working in the crypto world? What's been something I guess you wish you knew when you were starting out this journey?
I think just don't focus on crypto at all until you've got users and revenue, and then strap a blockchain onto the product at that point. But I would go as long as possible without entering any blockchain, crypto, Web3 mindset, and just focus on a product.
Yeah. I think a lot of crypto projects focus on their community, and sometimes that community will like not necessarily be the best backers for if you're trying to build something long term.
I think if project has revenue, that community is going to organically pop up right away.
Yeah, exactly. Cool. Well, David, thank you so much for taking the time with some crazy travel and everything to drop by the office. It was really, really interesting getting to hear a bit more about Pipe, and really appreciate you taking the time.
Thanks for having me on. I really appreciate it.
Absolutely. Thank you, everyone, for tuning in. Thank you, Telegram, for requesting David. You can just do things. You can just request guests, and we'll bring them on. Please like, share, 5-star rate wherever you get your podcasts. If you enjoyed this episode, we'd love if you shared it with a friend, and we'll see you all again very soon.